All right, another economic indicator, perhaps not as well known, are hedge funds. What stocks they are buying can signal where the economy is headed. Ken Heinz, president of Hedge Fund Research, and Vincent Deluard, global equity strategist at TrimTabs Investment Research, join us now to decipher what's on the buy list and why hedge funds seem to be so optimistic. Vincent, thanks so much for joining us. Ken, thanks to you as well. Let me start with you, Ken, because I know you have a measure of how well hedge funds have done. They've been optimistic. Our story showed that in the fourth quarter of last year. How well have hedge funds done this year so far in 2010?
Absolutely, Matt. I think the managers are optimistic, but I would caution to say that they might not be too optimistic. As you know, equity markets are narrowly lower for developed equity markets thus far for the year. And through mid-February, the HFRX Global has actually gained about 30 basis points. So you have seen gains through a relatively difficult environment, which suggests the managers weren't too overly optimistic coming into the year. The other thing interesting about our first month of performance of 2010 was that you did see a bifurcation of strategies. Equity hedge and macro strategies were lower in January, where event-driven and arbitrage strategies posted gains for the month.
You know, Vincent, let's bring you into that. I saw you nodding while Ken was speaking.
No, I mean, I would agree with Ken that, 2009 obviously been a very good year for the industry. We've seen some profit taking in December, January, especially in the more speculative strategies like emerging markets. I would still think that hedge funds are cautiously bullish. We're seeing short interest go down. We're seeing equity long short, their returns kind of match what the market does, so they should have a small net long position. And the other thing that might make them buy equities is that they're getting money. Historically, December and January are the worst months for hedge fund flows because you have the year-end redemptions. But this year, we had small inflows, around $5 billion in December and $10 billion in January. So people see new money coming in.
Is that pretty significant in terms of general flows that we're seeing in and out of hedge funds?
For January and December, yes. Overall, it's pretty small. But if that goes on, I mean, you could expect maybe 10, 15 billion in March and more coming in April. So, I mean, they have to put the cash to work. They're obviously not going to be short the market at this point, so yeah, buying equities makes sense.
Ken, where are the most? Which funds are getting the most money? I mean, which funds are the most popular? Are the ones that did the best in 2009 going to get the bulk of the early money in 2010?
We didn't see that in the last couple of months. We actually, the weakest performance of 2009 was actually some of the stronger in 2008. And we did, and those were the macro strategies. There were capital inflows into that. So I don't think that it's necessarily accurate to say that investors are necessarily chasing performance, but I think they're generally allocating across the board based on what they expect to happen. Just to add to that, Matt and Carol, I think that managers are positioning for an environment in 2010 when they're sort of trying to expect the unexpected. I mean, if you look at 2008, the year of the financial crisis, and look at 2009, the year of the recovery, 2010 is a situation where we're trying to figure out how do we get back on track, and how does the economy go from being in a state of being a lot of stimulus applied to extracting that stimulus. We saw the beginning of that just last week with the U.S. Federal Reserve raising the discount rate, and we saw a positive reaction from financial markets there. I think that's a very constructive sign in terms of what managers are expecting in 2010.
But let me ask you, Vincent, because our story on the Bloomberg as of December 31st looks at these filings of hedge funds, and we talk about what they're buying, the energy producers, the mining companies, the airlines. We did see, though, a significant market pullback in January. Could we possibly, or can we make the assumption that maybe their strategy changed somewhat as we saw the market pull back?
Well, again, I think the biggest trade is not so much an equity trade as it is a currency trade or maybe an inflation trade, whatever you want to call it. We've seen a lot of hedge funds try to hedge themselves against inflation, also by a lot of gold. Even the funds that you suggest, I mean, they're buying energy companies and not really buying consumer discretionary.
Right.
And the other interesting trend we've seen really since the dollar bottom, since October, is massive long position of hedge funds on the dollar. We just made a survey, asked a couple of 100 hedge funds, macro managers, what's your favorite currency? They had a choice between 60% said the US dollar is the favorite currencies. We're also seeing the commitment of traders, the speculative traders of dollar index futures massive net long on the dollar, 10 to 1 for spec traders.
Overwhelmingly.
Overwhelming. And the timing was absolutely perfect. Started being long in October when the dollar bottomed and increased the long positions. So that trade may seem a little bit crowded, but right now, hedge fund managers see that the Fed is making noise about raising interest rate. The euro is in a mess. So I think they still want to bandwagon this train and get the dollar.
So Ken, with that in mind, I mean, you were pointing this out too. What do you think we're going to see as far as the winners? Which strategies are going to be the winners for 2010? And only about 10 seconds here.
Yeah, I really think there's a lot of opportunity in the event-driven strategies in the market for corporate transactions. There's a lot of dislocation in the current environment. Those managers are there positioning to take advantage of, and I think those will be strong performers in 2010.
All right, hey, Ken, thanks so much for joining us. Ken Heinz there from Hedge Fund Research. Vincent Deluard here from TrimTabs. Did I say it? Did I say it right?
Perfectly correct, like a Frenchman.
Thank you so much. We really appreciate it. Merci for your time.